What's up, everybody? It's your girl, Jax. You know I'm already back with another one. As promised, we are done with the setup. You have all the free tools you should need in your toolbox to practice demo trading, practice charting, and then get ready to live trade here very soon. Now, you can't have fun without the fundamentals, right? So today what we're going to do is lay out the groundwork for everything that is Forex. You need to know what it is you're even getting yourself into, right? Without further ado, let's hop into it. You know who this mask reminds me of? Man Ray from SpongeBob. Flash a picture here. Okay, ladies and gentlemen, I submit for your consideration in learning the Forex Blueprint. Let's hop into this. What is Forex? Essentially, it's basically a global financial market that allows us to trade currencies. Now, why is that important? Well, think about this example. Prior to COVID-19, you may be more familiar with this market than you might think. Once upon a time, there was a world where you could hop on a plane, you travel to wherever the heck you wanted, even internationally. Pertinent to this example, if you ever traveled to a different country, remember, you would have had to find a currency exchange booth. You basically need to exchange your money from the country of your origin to the country that you're visiting. Once you've done this, basically you've essentially already participated in the Forex market unknowingly. So whether you knew it or not, that's pretty crazy, huh? I just want to put this massive opportunity that I'm laying on your plate into perspective. So something you might be even the slightest bit familiar with, but far more familiar than this market I'm willing to bet, is the stock market, right? You've heard of it. So to put this into perspective, the stock market churns about $22.4 billion per day. That's a billion with a B, as in Bravo, right? Now, in the Forex market, basically churn 6.6 trillion per day. I said a T as in tango. 6.6 trillion. That completely whomps the stock market. So that in perspective, with that volatility and that liquidity in a market, you can't stand but to win as long as you learn these tools I'm going to give you. So here's a little bit more on Forex and the components that exist within it. First off, we already familiarized ourselves. Next, there are a few ways to trade the Forex market, whether you're aware or not. You may have always traded it traditionally by pip, you may have traded it by binary options, or you may be completely unfamiliar and that's why you're looking at me today. Now, this can go one of two ways. Basically, binary options, you're essentially deciding on a market position, right? Forecasting movement in one direction or the other, meaning a call or a put, like you've learned in other videos, or a buy or a sell, or the green button or the red button, right? Now, trading by pip is very similar in that you're doing that. However, you're utilizing lots and leverage. I will teach you about that later, along with responsible account management that I've begun teaching you, but you'll learn in depth. You place a trade and you gain value on that trade per pip that you'll learn towards the end of this lesson. And that movement, for however long of a period of time you want to hold the trade in that same direction, that's how you will win until you close out your trade manually. You must do that trading per pip. Whereas the difference is basically binary options. It's a set amount of money you are wagering for a set amount of time until it expires, right? Now, in case you aren't aware, there are other forms of markets that I will get into here and summarize very quickly. Now, commodities, you're going to see things on the screen like an oil rig, that's what that is in case you're unfamiliar, and some gold. Now, who doesn't dig that, right? Those are very simple examples of what commodities are. Now, a quick Google search would simplify this and define it as a basic good used in commerce that is interchangeable with goods of the same type. Now, the next thing you'll see on here is resemblance of a bull, basically resembling the stock market. We'll get into that lastly, but first I'd like to explore what indices are. Now, simple examples I've touched on in other videos and shown you charts. This is the S&P 500, US 30, and nasty NAS, one of my favorites, the NAS 100 index. So a quick Google on this topic. We'll summarize it as indices being the plural use of the word, whereas index is an indicator or measure of something. In our case in particular, it's a statistical measure of change in a given financial market. Now, that being said, in our case of financial markets, stock and bond indexes or indices consist of a hypothetical portfolio of securities representing a particular market or generally a segment of it. So US 30 is some of the top 30 companies in the US. And the same kind of consistent pattern can be seen in other indices. So you'll see right here, Mr. Benjamin Franklin himself. Who doesn't love that man, especially when it comes in paper form, am I right? So on top of that, you'll see the symbol that now is universal, Bitcoin. Beautiful, right? Bitcoin stands for beautiful, that coin. Now, this is a cryptocurrency, one of many. And what is a cryptocurrency? It's basically a digital or a virtual currency that can be secured by cryptography, which is nearly impossible to counterfeit. One of the many beauties of it. And typically, they're all decentralized entities. No one party can govern the currency, really. Now, blockchain technology is utilized, which is a distribution ledger, which can confirm transactions, pin them, anything that you buy or sell, it's always confirmed in the blockchain that is enforced by a network of computers, and there's generally a trail that can be accounted for. Now, stocks, much like I said the bull before, it's so crucial you understand, this is the one you're probably the most familiar with. This can be things like Apple, good old Elon with Tesla, SpaceX, you name it. You know the deal. It's pretty much the only financial market, as I mentioned, that anyone is even remotely versed in, or at least has an inkling of an idea about. There are singular holdings in any given company. So Apple is Apple, Tesla is Tesla, simply put. Now, Forex Logistics. Here we're going to go over times you can trade, the different entities that are in the market. It's not just us, just so you're aware. How to chart, which we've been over a little bit before, and how to place various orders and what those different kinds are. So, times you can trade Forex. I love this. Forex is a 24-hour, 5 days a week market. So I don't care your sleeping schedule, your work schedule. There's no excuses. You can profit if you know what you're doing. Stick with me, right? Okay, this market only closes over the weekend. Slackers, right? Now in binaries, you can actually trade OTC, which you've already learned from me, means over the counter. Now, I don't always recommend it, especially if you're starting out, but just know that option is available if you must trade over the weekend. Unlike the stock market, the Forex market does not simply close at the end of each business day. Simply, it shifts into other financial centers around the world. That brings us to different entities in the market, and it's crucial from that last statement that we understand. Simply put, there's 4 different entities you've got to put up with in the Forex market. Now, number 1 is the big shebang, the super banks, or the interbank market. This is things included like Citi, JP Morgan, Chase, right? UBS, Barclays, Deutsche Bank, Goldman Sachs, HSBC, and Bank of America. Now, the second entity you're going to run into is a large one, and previously used example, Apple or any other large commercial company is what I'm getting at. Now, this is basically whenever Apple, who must first exchange their US dollars, since they're a US-based company, over to a foreign currency such as Japanese yen, whenever they buy materials and parts for their products. The third entity you're going to run into is governments and central banks. This is the likes of the Federal Reserve, which we all in the US know, as well as the European Central Bank and various other entities in these markets. The third entity you're going to run into in these markets are governments and central banks. This is the likes of the Federal Reserve, the European Central Bank, and various other entities in this bracket. Now, international transactions, so you're aware, obviously require the exchange of any given currency with dealings between US, China, whatever it may be. It always involves that exchange prior to their transaction. Now, fourthly, and my favorite, it is us, the speculators, aka you're gonna hear in the trade game, retail traders. Don't let that throw you off. That means us. All the tools to get the profits are largely free. In my first setup series of 5 different videos, which you can go to my YouTube channel and watch, I basically lay out all tutorials, exactly how to get all these items for free, so you're very well prepared for this next series, which is starting now, the Forex Blueprint, and so on, where you get the fundamentals and you really learn technical analysis and how to get into these markets, all the way to the advanced series, all for free, mind you. Just stick with me. This brings us to the very foundation I was speaking of. Now that you get the gist of what Forex and other markets that you're going to be specializing in are, let's get into the particulars of things. Now, there's 3 essential types of analysis. The one I'm going to be teaching you about the most is technical analysis. Now, firsthand, there's fundamental analysis. This is just a graphic of an economic calendar, and I'll show you the resource of where I get it so you can check it every day if you so choose. Fundamental analysis, I don't place too much weight on other than extreme news events where I just won't touch that currency. But there's so many currencies in the world, the opportunities are endless. So don't be afraid to shy away from a currency. If you see something that's not listed here, then maybe like a red folder. If you notice this yellow, gray, orange column, that's how you know the impact and severity of the news. Nextly, it's technical analysis. Now, you've been seeing me in action with live trading when it comes to charts. Now, charting, indicators, price action are all different components of technical analysis, which is my specialty. How I make all my money in the market successfully and keep it, then withdraw it back into my bank account. I will teach you all of this. Don't worry. Lastly, on this topic is sentimental analysis. Now, it's basically based on emotions and the positions of others that work in the markets, that take positions in the markets. It's basically the sentiment, the very definition of every single person in the market, what you've heard, what you think, and how you feel about it. Let's go to the charts, right? Our favorite. There's different types of charts, and I'll teach you how to read each and every one of them. But just so you can put a name and a face to it for now, let's see. So what we're looking at here is a bar chart. Very crucial, you know the names of it so you don't look like an extreme noob. Moving on. My absolute near and dear, tried and true favorite chart of all time you're looking at, Japanese candlesticks. On any charting example, you may see Japanese candlesticks, but you may just see candlesticks. No, these days they're one and the same. Next, basically like Japanese candlesticks, only a different format, hollow candles is exactly what you're looking at right now. Here is Heiken Ashi. A little bit more smooth, and you could definitely see the volumes of sorts, and you'll learn about that later. But when a currency is gaining traction and ramping down in strength. So some people prefer this. I will admit, it does look smooth. It is useful, even when you're starting out. Next are the line charts. Mentioning starting out, this is actually very easy and useful when it comes to learning support and resistance levels, which is you will learn sooner than you think. This is area charts. Now, if you're familiar with race option, or even if you default that option on pocket options, you will see area charts are basically a filled-in version of line charts. Now this is baseline. It oversimplifies a chart, and you can reference this in comparison to other charts when you're learning. Baseline shows the baseline of a currency over time, where it's overbought or oversold. It's like the charting version of a stochastic if you've been watching my other videos. Now, before we move on, just so you know, there's more versions that exist than that maybe even the most experienced trader may not be aware of. These are the likes of Renko, line break charts, Kagi, K-A-G-I, point and figure, as well as range charts. So if you have TradingView, this is readily available. I believe it might be in the upgraded versions though. That's totally worth it whenever you're in the learning phase, so you could compare all charts and then really see the common thread, which is the price action, and really begin to translate it in your mind rather than just learning one type of chart. Specialize in your craft is what I believe. If you're going to be doing this, do it very well, to the best of your abilities. All right, now this is your major first technical analysis lesson. Really, it's math, but it's junk math. So I used to be good at math, now I'm terrible at it. All you need is a calculator, or there's even tools in TradingView that I'll show you a short program later. But basically, let's examine the definition. A pip is the smallest unit of price movement for any currency pair. For pairs with the JPY, which is the Japanese yen currency, is the counter currency. It's 0.01 yen, which is 1 pip. For all other pairs, it's 0.0001. So the fourth number from the decimal, you're going to want to consider a pip. There's typically, in other currency pairs, aside from JPY, 5 digits after the decimal point. Now the fifth is a fraction of a pip, which you basically want to disregard unless you do binary options. So here's an example on screen just so you can understand. This is the pair of Euro USD. And most other pairs movement from, say this example is 1.4 thousand to 1.4 thousand. That equals 1 pip. If you put in those values on a calculator, it doesn't matter what order, but 1.4 thousand minus 1.4 thousand. That's going to show you a negative number. But disregard the negative. If you put it in the opposite way, it's the same exact value. And if you put it in the other way, same exact value. Whether negative or positive, just know a simple calculation will show you the right way. Now, for the example USD JPY. This is crucial to understand that the Japanese yen, with any other currency, it must be the counter currency for this rule to hold true. A movement from 80.00 to 80.01 is considered 1 pip. So basically, in any Japanese yen counter currency pairing, 2 places away from the decimal point equals 1 pip. Here, do a quick pause. You can take a screenshot of the definition and study. If you would like some case study or homework examples, leave a comment down below and I will definitely get something to you and advise you guys of it next video. Maybe start a Dropbox or something with useful tips, homework, exercises, techniques. That way you guys can have it readily available in the event you want to master this craft. This brings us to the last portion of this video. There are 2 different types of market orders, and this is how you are to execute them. So by 2 different types, it's not what you see on the screen. One is something you're already familiar with in my other videos, and now I'm putting a name to it. It's market execution orders. So that means that if you're live in the market, you see a trade you want to take, you enter your values, be it binary options is the value that you want to wager, say $10, and the time you like to wager that for. Then you click the button for whatever direction you pick. If it's for pip trading, you basically want to put your stop loss, take profit if you're that kind of trader, calculate out your lots and leverage. And again, there will be resources after for any trader. There's a few links you need to bookmark, save, and utilize, especially when starting out. And then from there, you basically put a buy or a sell if you're trading per pip, and then you hold it for, like the previous definition I showed you, whatever amount of time you want until you manually close the trade out. The second type of market orders are called pending orders. Now there's 4 types of pending orders. Let's take a look on the screen. A buy stop, that's defined as an order placed above a price and the price keeps going. Now a sell stop, an order placed below price and price keeps going down. A buy limit is another upward function. So an order placed below a price and then it goes up. A sell limit is the exact inverse. An order placed above a price and price then goes down. Now, as promised, let's get into the very last bit of things that is maybe the most valuable going forward in your trade career. This is valuable resources. Pause me, take a screenshot of this, enter this each and every single link into your browser, and bookmark it. You're gonna wanna use it, especially starting out. These are the likes of the news calendar I was talking about. If you're looking into stocks or even indices, you're gonna wanna look at the stock screener. That's the next one. Forex correlation, as you may have seen in my other videos if you stuck with me. If not, basically certain currency pairings operate the same as others. So if you locate that correlation in the market, you can basically place 2 positions on 2 different pairs of currencies and bank on them at the same time because they move almost identical. There's a position size calculator. Now, if you're going to be a pips trader, which means trading per pip movement, you're going to want to use this calculator so you can responsibly margin and, your account leverage, use the proper lot size. Definitely bookmark that. If you're a binaries trader, it's not so important, really. A pip calculator, if you're lazy and you just want an easy way out, or you just want the faster way, so to speak, use that. Currency strength meter, some people use it, especially in binaries. Some people don't. I don't anymore. I used to when I was starting out. Try it out. See what works best for you. Only you know that. The compound interest calculator, that's something that you can look forward to in the future. So you basically input your trade account size starting out, how much you're going to reinvest, and then you have an outlook over an X amount of time whenever you look on those calculations to see where you should be if you were to responsibly manage your risk and then end up where you think you should be at the end of every trade session and responsibly take your profits and run and live to trade another day. Forex market hours converter. Now, you may not be the best at Forex times. I mean, nobody is. It's usually in the universal time zone, which, come on, let's face it, it's ridiculous. I used to be in Mountain Standard Time. I recently moved and now I'm here in Eastern Standard Time. So it was a lot to get used to. You just punch in your time zone and it shows you the open and close of every single market session. All right, put it there. That was your first crash course. I'm so proud of you for sticking it through. Now you really know what's good in these markets. What you have to look forward to next time is something that's going to really get us somewhere, which is key levels of support and resistance in the market, as well as identifying trend. Then we're going to go through charting and several examples so we solidify the knowledge. A very, very deep, heartfelt thank you for watching. A quick reminder to please like, comment, whether good or bad. Doesn't matter, we always value the feedback, right? Subscribe as well as turn on post notifications. Now, all of these items, if you do all involved, this is to your benefit because you are entered into our monthly giveaway every single month on every single last day of the month. It will be announced. Thank you again. I really appreciate you joining me on this journey, and I can't wait to grow by your side and really see you line your pockets with those profits and see you take off to the next level. It's your girl Jax. I'll see you soon.
profit.